Welcome back to Brashenomics here on Monday, and if it's Monday, you know we're talking to Ryan Leopold on our little Mortgage Monday segment. Hello, Ryan.
Hey, Ben. Good to see you, buddy.
Good to see you, and after being in the business for 14 years and now at Cobalt Mortgage, you've kind of seen the ups and the downs of interest rates, and it was actually kind of interesting because right before the show we started talking about how a lot of pre-approval letters are hardly worth the paper they're written on. Mm-hmm. And now you end up in this point in time where people think about, well, rates were so low, people got pre-approved, and now rates start to trickle up. And that can have a really big effect on what the validity of that letter is.
You can have a huge effect, and I think a lot of people take that for granted a little bit, and I think the industry has obviously changed a lot in the last 5 to 6 years, and I think that concept of a pre-approval is probably one of the biggest things that's changed. Is 5, 6 years ago on the mortgage side of things, you could meet with a client, understand a little bit about their financial position, and you just knew no matter what their situation was, you can get them approved. Whether you even reviewed those pay stubs, whether you even pulled a credit report, you kind of knew that one way or another on the mortgage side, you're going to figure it out. And now with underlying guidelines really being the tightest they've ever been, that pre-approval up front is more crucial than it's ever been. And I really let clients know and partners know all the time that it really has to be a group effort with real estate agents, mortgage professionals, and the buyers, that they're really engaged in the process and they're working for that validity of that pre-approval to make sure it's good, not only the day they're pre-approved, but when they're actually ready to make an offer. And it's a little bit unique, too, when you have kind of a seller's market now, and it's hard, or it may take a little bit longer for a buyer to get under contract, that reestablishing that pre-approval, every couple weeks or every 30 days at minimum is key.
So, I mean, and this is kind of what's interesting, because from a consumer, from a lot of people who might be out buying houses, they think, well, I'm pre-approved. And we get the question, well, how long does this last? And it lasts until something changes, and the change doesn't necessarily come in a pre-approval letter. It could come, or it could be your credit or income or assets or any of that stuff. What does it take to really get pre-approved, though? So at least it's good for, that day.
Mm-hmm. Well, I think the biggest thing is when somebody's going to get pre-approved, I think first and foremost, which I still see unfortunately happen a lot in this industry, is that people get pre-approved and lenders really aren't thoroughly evaluating someone's income via pay stubs, W-2s, and tax returns, credit report, and asset statements to verify where that down payment comes from. It's because that's always the three main things that lenders are going to look for to get you formally approved. And in this day and age where everything is so automated, is a lot of times you want to actually send all that stuff through an automated underwriting system, if not actually have an underwriter actually review the file before someone's in a position to make an offer. And I think that's where the sticky point is. I think a lot of lenders still take shortcuts on that, and they talk to somebody over the phone and say, oh, it sounds like you're good enough, and they don't actually take the time, collect a full file, because the stuff that you have to ask from a buyer up front is a lot of stuff. And I think that scarcity mindset that a lot of lenders may have, if you ask for a client for everything you're going to need up front, in some cases, if you're a lender trying to earn the business of someone doing a mortgage, you actually may scare off that buyer because of all the stuff you need. And so I think because of that scarcity mindset of some lenders, they're going to take shortcuts. And when they take shortcuts and they try to appease the buyer, making it easier than maybe, probably it should, that's when, some of those pre-approvals may not be good once they're actually in contract. And that's the most important time that pre-approval needs to be rock solid. And so things that can change. There's
a lot of pressure on the time sensitivity there. I mean, right? Because people, a lot of buyers or real estate agents will call and say, well, we just need this right now.
Yeah.
We need this pre-approval letter right now. That's what we need. Yep. Or John down the road, John Lender down the road said, well, I'm pre-approved and I haven't given him anything. And you end up, there's a lot of pressure because sometimes there's a sense of time sensitivity that can make it very difficult to appease the people you're working with.
And I think that's crucial because, and that's where I think not only clients, but real estate agents and partners who are involved in helping people buy homes need to take an active role and really have a partnership. Everybody needs to be a partner within a transaction because we get those calls all the time too, where we'll work with one of our partners will call us on a Saturday at 3:00 and say, hey, I got a buyer I just met with. They want to make an offer on this house and I need to get them pre-approved today. Okay, that's great if that client, the lender is available at 3:00 on a Saturday. And I'd say a good lender may not always be available at 3:00 on Saturday because they're professional and organized and structured. Number two, a client may not have that complete and accurate file ready to go at Saturday at 3 o'clock to make sure you have the validity of that pre-approval. And because of that pressure of having to make an offer on that day, that's where some shortcuts come into play too. So I think everybody being prepared and organized, way ahead of time. So that way the buyer, real estate agents, and everybody involved in the transaction don't need to feel that pressure of needing it right away, because there's just so much that goes into what's needed for a pre-approval.
Okay, so let's just say somebody gets pre-approved, everything's good, there's no time crunch, and now you have to start looking at today because rates are up a little bit, and I want to get through this. We only have a couple minutes left, and we'll come to some strategies here at the end or at the beginning of the next hour here. But, rates start ticking up a little bit, and now the pre-approval letter is it may not be valid anymore because of a change in interest rates.
Well, we've been talking about it for months now, that literally interest rates are the lowest they've really ever been. And you can look back 50, 60 years, the average 30-year fix in this country is like 8.25%, and we're in the mid to high threes right now. So you got to understand that rates will not stay this low forever. So if someone's pre-approved at 3.5, for example, and they're really on the edge of that's as max as they can afford, is that $400,000 house with a $350,000 loan, and they're right on the edge at 3.5%. And then interest rates tick up to just 4%, or even as high as 4.5%, that could affect their payment by $200 or $300. And now they're not approved anymore. So that's when things get a little bit sticky as interest rates change. And when you're in a level the lowest they've ever been, and you start seeing them tick up, that could affect their ability to be pre-approved. And when we talked about everything's automated these days, is $1 difference in payment, whether it be higher taxes than estimated, higher insurance than estimated, or a higher interest rate, could take them from being approved to not approved. And we're talking about a couple dollars, let alone a couple $100.
Yeah.
So it's a big factor.
Yeah. Well, Ryan, we do have to go to break, and I want to bring everybody back and talk a little bit more about the current market and what's going on. But stick around till the top at about 4 o'clock. Let's come up with some strategies for people who are pre-approved right now and are maybe a little bit worried about interest rates going up. We'll be right back after this break. You're listening to Brashenomics.